Hello and welcome to EduFund channel. Today we have a special guest with us, Kamal Gada from UTI Mutual Fund. Kamal is a fund manager managing UTI Healthcare Fund. He joined UTI in 2008. Prior to joining UTI, he worked with Bharat Petroleum in the finance department. Kamal is a qualified chartered accountant and he holds a CFA charter from CFA Institute USA. In today's video, let's hear from the expert himself on how he has been managing the UTI Healthcare Fund and what kind of investors should actually explore UTI Healthcare Fund, which is a thematic fund. Over to Kamal.
Thank you, Neeraj, for having me on your channel.
So to begin with, Kamal, I wanted to understand your perspective about how have you managing the UTI Healthcare Fund?
UTI Healthcare Fund specifically focuses on the investments in the healthcare and the pharma space. Also, we look at the companies where a major part of the revenues would be coming from this sectors. What excites us about the healthcare sector is, it offers both the opportunities as in domestic as well as the exports opportunity. That's one of the very rare feature what this sector offers. And given the rising income levels, rising affordability, the government push as well as the rising penetration levels, insurance penetration levels, keeps this sector under very much limelight and gives a long way for the growth from this sector.
So UTI Healthcare Fund was incorporated in 1999 and today we are in 2023. So it has seen a roughly 2 decades journey. What do you think has changed over the last 2 decades? Or what do you think has not changed over the last 2 decades in the terms of fund management?
The process what UTI follows remains same across, whether it be I managing or someone else managing. So the underlying process of selecting companies has remained the same. When it comes to sector, you will see different kind of companies coming in, different kind of business profiles coming in. So, over this last 20 years, we have tried to, incorporate these changes in the fund when we do investing.
So when you talk about innovation and the evolvement of technology in the healthcare space, biotechnology is one area which has been growing leaps and bounds. What are your thoughts on how have you been able to incorporate the changes in biotech while taking positions in the fund?
Frankly, Neeraj, when it comes to innovation, our companies are well equipped or have a right set of talent to pursue that. But when it comes to innovation, it's a very expensive journey. So barring few companies, many of the companies won't be in a position to do this spend. Today their balance sheets doesn't give them that leeway. But specifically for our fund, what we have tried to incorporate is, we try to invest in the companies who typically are associated with the innovator companies, the global innovator companies, and enable them to pursue their innovation business. So that is how we have tried to incorporate innovation in our fund.
When you talk about global innovation and the companies getting integrated, domestic companies getting integrated with the global ones, how have you managed the currency hedging while managing the fund?
Definitely currency plays an important role. As a process, whenever we initiate a company, whenever we invest the company in our portfolio, there is a deep dive into the risk aspects attached to each of the investments. So, and on a regular periodic basis, that gets discussed, that gets evaluated. And if there is action required, we will definitely take action and manage the risk in a particular way.
When you talk about the overall portfolio allocation, pharmaceutical or healthcare for that matter is a very broad category. Within healthcare, we have pharmaceutical, we have bulk drugs, we have formulations, we have hospitals, we have many other segments. What would be your typical allocation to each of these categories within healthcare?
There are 5-6 sub-segments where typically we would invest. And historically we have favored investments in the companies who are domestically linked. So that bias remains with us still today. In terms of the active positive weights, it will be on the branded generic side. And in terms of the underweights, it will be more on the generic side. But generics is also a sector which has its cyclical ups and downs. So we typically want to participate in the companies who have higher exposure to the developed markets. And when it comes to the hospitals diagnostics, it's like a equal weight position today. And even on the CDMO space, which is like, helping the innovators in their journey, it's a equal weight position today because of the valuation concerns that we have on the sub-segment. So it's a broadly, well-diversified kind of a portfolio that we run today. And, the critical aspect is that whichever, sub-segment we see is having tailwind, we would want to right-size our positions in the portfolio.
All right. We have recently faced the global pandemic, which is COVID-19. What were your experience while managing healthcare fund, or maybe because healthcare was a very important sector, which was booming that time because of COVID-19 pandemic. So how did you manage or sail through during that time?
First of all, thanks to the healthcare sector itself, we did a great job in managing this pandemic. I think from a company's perspective, the major challenge that the companies faced was on the supply side issues, where, both input cost pressures as well as the logistic pressures were visible for all the companies. And what we observed last maybe 18 months or so, all these pressures are coming off. And when it comes to the margin profiling of this company, that is coming back to normalcy. And especially when it comes to our fund, we stuck to our investment process, which kind of focuses on companies which have a higher growth runway, better managements, as well as stronger balance sheet. So we continued to follow that process, and that's how we kind of were able to ride through this pandemic.
You mentioned about your process while managing the fund. Would you be able to throw some light? Do you follow a growth approach? Do you follow a value approach? Or do you follow a blend kind of an approach while picking the stocks?
Yeah, it's a great question. So when it comes to our fund, it's a kind of a market cap agnostic fund, where we want to invest in those companies where we do a bottom up kind of a approach. So it won't be restricted to a large cap companies. And if you look at our today holdings, it would be more mid cap and small cap focused companies. So the large part of the focus is given on the cash flow generation as well as the return on capital employed metrics. And the second aspect would be the management capabilities. So these three aspects are the key when it comes to investing in any of the portfolio companies.
That's a very well-defined process. Let's talk a little bit about the risk management practices. I understand that every fund manager has to have manage the risk of the overall portfolio. So what are the internal guidelines or limits which you would have defined for your fund, which you can highlight for our users? For example, would you take an exposure of more than 10% in a single name, or any sectoral exposure which is in line with the benchmark? How would you deviate in that to manage both the alpha generation and also the risk side?
From a regulatory aspect, you can't invest in a stock more than 10%. Obviously, there are benchmarks which are attached to our funds. We can go up to that weightages. But as per the regulatory requirements, we can't go in any of the stock beyond 10%. Obviously, if some stock has a 15% weight, we can go up to that weight. We can't go above that weight. So these are the limits which are given by the regulatory people. Internally, what we do is try to keep as active weights as possible, because if you kind of be hugging to the benchmark, then it doesn't provide any alpha to the investors. So wherever our conviction levels are higher, we try to take maybe 100 to 200 or 300 pips active weights in the positions. Even can go higher depending on how comfortable we are with the particular company. So that is how we manage and how we try to generate alpha for the investors.
Healthcare sector is also known for a lot of regulatory risk. What would be your approach in managing the regulatory risk when you manage the healthcare fund?
No, when we think about regulatory aspect, it's part and parcel of the pharma company. Definitely, when it comes to regulatory requirements, they are more, one would say stricter when it comes to the pharma sector. We typically invest in a portfolio of at least 30 stocks. That is how we want to diversify the risk. So you can't get away from the risk completely. But when you invest in a portfolio of at least 30 stocks, you would ensure that the risk gets covered. So there is no a particular science to managing that risk. But when you do a portfolio investments, that risk tends to get mitigated.
Often we get questions from our investors saying that should I take SIP route or should I take a lump sum route? Because right now I feel that the markets at 65,000 is very costly, or should I wait for a correction if I want to put a lump sum? What would be your advice if someone is looking to take a thematic exposure, particularly in healthcare? for investors who are trying to evaluate these options?
No, I think SIP route is always the preferred route. You are not there to time the market. You are investing in a systematic way. That's the most disciplined way of investing, for that matter, in any fund, be it sector fund or be it well diversified fund. So the preference for any investor would be you follow a disciplined approach invest in a SIP manner.
Any last closing remarks which you would want to share with our viewers on the healthcare fund?
When I think about healthcare, what excites me personally is the kind of growth profile it offers. When I look at last 10 to 15 years kind of journey, I think that is the return matrix has been in excess of what you would see on a GDP growth profile. So typically this sector has potential to give you returns which are higher than kind of a real GDP growth for the country. Secondly, as I alluded to, most of these companies have strong balance sheets, have decent managements. So that should keep the earnings growth coming for the sector. Plus, as we come out of pandemic, we already come out of pandemic, the margin profile should improve for the sector. So that keeps us excited for the sector, and that's what investor can look forward to when he's investing in the healthcare fund.
Okay, one last question, Kamal. I wanted to understand what would be your advice to our retail investors who are looking to take a thematic exposure on the healthcare sector?
When it comes to broader indices, healthcare pharma only gives you 4% kind of exposure to the when you play through larger indices. So particularly when you invest in the healthcare fund, that offers you the opportunities which healthcare as a sector would bring to you. It is a unique sector where both domestic as well as export opportunities are available, and that gives you a long runway of growth. Plus the balance sheets are very strong for the companies. Second, the margin profile would improve from here on, given that they suffered a lot during the pandemic time. And thirdly, valuations have gone up, have moved in last 6 to 12 months, but I would say they are not out of the whack. So valuations are still in a comfortable range. So the earnings growth, good managements, good balance sheets, that keeps us excited for the sector, and that's what, as a retail investor, you should also look when you invest in the healthcare fund.
So thanks a lot, Kamal, for taking out time today, and it was wonderful having you with us here, and I hope our users have taken some great insights back on the healthcare fund and will make the decisions accordingly. Thank you for giving your time.
Thank you, Neeraj, for having me on your channel.